So this is not necessarily a bar that I would go short on, but it all depends, and I don't want to get it too complicated because then we get into some other rules, and I just want to get you down with the basics of the opening range right now. And but just for sake of example here, if this bar did close on higher volume, we would have had a valid breakout of the opening range, but we didn't. But you can see on the pullback or the reaction bar, it bounced off of the low of the open range. But now, even though this bar closed with lower volume, when we look at this bar, this is a range bar, and see, and we apply our range bar rules here. And this is just the type of thing I mean when I say that we don't want to trade any technique in a vacuum or alone by itself. Okay, because once we have a trade signal and then we have an entry signal, and they're two separate things. And knowing the difference is the difference. But now, well, you're jocks. I don't think I can give you too much, so I'm just gonna go into it here. This is a range bar. Now, although this bar has lower volume, it closed below the range bar, and we know that range bar itself is support and resistance. And these are a lot of sellers here in this bar. This is a long range bar. And so there are a lot of buyers here who are going to be looking to get out. So when the price closed down here and it bounced back up to the breakout, see, because here we actually have two breakouts. We have a breakout of the 1 hour opening range, and we also have a breakout of the this range bar. So but I may have entered here on this trade and I may not, but most likely I would have, but I can't say for sure. But I trade the opening range a lot, and I kind of have a feel for it. But this would not have been a bad short here, but depending upon what level you are and your understanding of the range bar, then I wouldn't suggest that someone entered short here. But we can see here how price fell down to next level of high-low support and moved back up, and now we get back up, we move up, and we get back into the opening range here, the close here. But we can see that it stopped here. Price came back up and got knocked back down by this range here, by the high of the opening range. Came back here, got knocked back down from the high of the opening range. And this bar here, we see that it came down here and closed above the opening range. Now we have a long signal, a close above the high of the opening range. This is a long signal depending on the volume. Let's see what our volume looks like here. Here, yes, we have significantly higher volume, so that is a long signal. Now, so the signal is to buy at the opening, the high of the opening range, which would be here. Okay, and we see that this bar actually pulled back to the opening range, but unfortunately on this one we would have gotten stopped out because price spiked below the opening range and popped back up, and that's nothing more than a stop hunt here. And just like I mentioned before, operators know the opening range, and if they can, they'll try to spike it below or above depending upon which direction, and try to stop you out, because they know a lot of traders have their stops just below the opening range here. And later on we can get into details about how to avoid the stop hunts and still stay in the trade even when price does break below the opening range. when you should stay in the trade and when you should get out. But for right now, Jocks, I want you to understand the opening range and see how it keeps you most times, most days, on the right side of the market, long or short. And you don't have to trade the opening range or even incorporate it into your trading at all. But I know that you're the type of trader that's always looking for even the slightest edge, and you're a lot like myself. And on that note, I'm going to end our discussion for now about the opening range. And I already know that you're going to do some back testing and study your charts and look at the opening range. And I'm sure you're going to find that the opening range is a very good strategy to wrap around the LCM strategy. And really, the open range is not an LCM strategy by itself, but the way we trade it, we incorporate it into LCM and add the LCM rules to trading the opening range. But that's it for now, Jocks. I don't want to make you watch a feature-length presentation, and of course we'll talk more about the opening range and about the little nuances to it. Okay, bye for now, Jocks. Cheers and happy hunting. Thanks.